favor of large caps, you're saying. And speaking of earnings, Nimesh has actually put together some interesting data for us. Nimesh, take it away.
Well, we are going to start a very busy season. We just saw what happened to IT today, right? The index was a 5% on not so great numbers. So let me just go to the wall and explain what to expect in Q3 in terms of the earnings season. Now, again, in Q3, the domestic sector is going to drive the earnings. So that's the 20% growth is going to come only from the domestic sector. So that's the big sector to watch out as far as earnings are concerned. Now, expect a 7% revenue growth, expect a 9% EBITDA growth, and a 11% PAT growth in Q3 across the Nifty universe. So that's the broad earnings picture as far as the earnings are concerned. But what to expect? The margins are going to expand for the fourth straight quarter, and even in this quarter, expect 165 basis point YOY margin expansion. So the numbers on margins will look very good for most of the companies. So that's a broad picture. Now look at, I've just drilled down to the individual sectors as well. I've left IT to Rima. I'll start with banking. For banks, expect a loan growth of 15 to 16% YOY and a 4% quarter-on-quarter. But for banks, expect a quarter-on-quarter some bit of moderation in terms of NIM as well. So 8 to 10 basis points is what the street is anticipating in terms of moderation for the banks in terms of NIM. The second is going to be NBFC. NBFC is going to see a very strong quarter according to most of the analysts. The growth momentum is likely to sustain, and CLSA believes that within the NBFC, the no-brainer pick is Bajaj Finance. So that's a big pick according to the CLSA. Look at autos now. For autos, the margin expansion is going to continue on back of lower cost, but the two-wheelers are expected to outperform both four-wheelers as well as the CVs in this quarter as well. So that's the overall auto as far as earnings are concerned. The next sector to watch is chemicals. It's going to be a weak quarter, but it looks like that weakness is in the price. So it's not about the earnings for chemicals. It's the outlook for the second half that's going to be very crucial as far as the chemical sector stocks are concerned. The next is cement. We're going to be a very mute kind of a growth, 5% volume growth for cement, and EBITDA per ton could improve between 1100 to 1150 rupees per ton. So that's for the cement sector. The next is oil and gas. This is going to be quite interesting. We've seen a big rally in the OMC stocks, but expect a weak quarter from most of the OMCs on the back of the inventory loss. But it's the city gas companies which are going to report very strong margins. So that's going to be something, watch out for MGL, IGL and all. The next is agrochem. Again, the channel inventory is still very high and the demand is still very weak. So expect some bit of softness for the agrochem even in this quarter. Real estate, no, there is nothing to guess because there has been a record sales in Q3, the pre-booking sales, so to speak. So the numbers are looking good, very good. FMCG, it's going to be the same as what it was last quarter, a very tepid growth and a modest single-digit growth quarter-on-quarter for most of the FMCG names. So no big surprise of fireworks there. Then look at the mid-cap IT. I've left the large-cap IT. The mid-cap IT is expected to outperform the large-cap IT. So imagine what can happen to the mid-cap IT names if they outperform the likes of large-caps and all. In terms of metals, again, it's going to be a very soft, very muted quarter for most of the metal names. Pharma, again, it's going to be a very mixed quarter for the pharma stocks. So individual names can be a big difference there. And for telecom, again, no tariff hike expected, so it's going to be a muted quarter for the telecom sector as well. But this is the next interesting part. I've just looked at the Citi's report and what are the key positive surprises in the results. According to Citi Note, these are the stocks which can surprise positively. L&T is the first name. The order inflows are going to be quite strong, and execution is also going to be equally strong. Adani Ports, they've already announced that they're going to raise the guidance, so expect a healthy volumes growth for Adani Ports. GCPL, that's going to be an interesting stock in the FMCG basket. Overall, it's going to be subdued, but GCPL can surprise on the positive side as far as Q3 is concerned. Within banks, Axis Bank is expected, according to the Citi Note, to have a better quarter, both in terms of NIM trajectory as well as in terms of other issues as well. And the last is Hero MotoCorp. That's going to expect a better margin and an operational leverage as well. So Hero MotoCorp would surprise on the positive side. But now look at the negatives as well. Citi has put out 5 stocks which can negatively surprise as well in this earning. The first name is Bata. Weak exports as well as apparel, so Bata could surprise negatively. Lupin can see some bit of competition in individual sales or individual products, so that can have an impact. Tata Steel, the European can drag Tata Steel's numbers this quarter as well. AU Small Finance Bank within the private names can surprise on NIM as well as ROAs, which can drag, so that could be a negative surprise. And the last is Maruti. That can see a lower margins on higher discounts. So these are a few names which can surprise negatively. So Q3 looks good. The big will be the big margin expansion, which can continue for the 4th straight quarter, and that's going to be up 160 basis points YOY.
Okay.